Hi guys, good evening from this end. If you can hear me, drop a comment. Let me know if you can hear me correctly so that we can get started. Drop a comment. Let me know if you can hear me, guys. We are live.
Sell gift cards for Echo. Save.
Let me know if you can hear me correctly, guys, so that we can get started. I need to be sure the audio makes sense before we get started. Alright, beautiful. You are all welcome, guys. You are all welcome to this session, which is day 3 of our bootcamp session. If you are new to this bootcamp, I welcome you officially. On this bootcamp, we just want to go through some secrets about synthetic indices that we need to unravel. So I also have a lot of videos I have made on my YouTube, and you can go and check some of them. Okay, you can go check some of the videos so that you can put some knowledge in yourself also as regards synthetic indices. So today is day 3 and we're going to be going into liquidity. We're going to be talking about liquidity today. Now you might want to ask, what exactly is liquidity? That's the first thing we will be talking about. You might want to ask, what is liquidity? When we talk about liquidity, I'm going to explain it as simple as possible. Talking about liquidity, we are basically talking about money. That is the short definition of liquidity. If they say there is no liquidity in markets, it automatically means there is no money in the market. Okay, there's background noise. How about now? Is it better now? Alright guys, is it better now? Beautiful. Now when we talk about liquidity, we are technically talking about money. Okay, and talking about money, it means that for every move you see in the market, there is money there. If you want to trade any account, if you want to make a deposit or anything, you definitely will deposit money. That is what you use to trade, except of course if you are trading on demo. That is when you can say you are not depositing your money. But as long as it has to do with the market, it is money that moves the market. Money moves the market in total. So that is why we say liquidity is money. So if we say liquidity is money, it means that for every move you see in the market today, there is money. For every of these candlesticks, there is money in there. For every candlesticks that you see here, it contains money. But where are the specific areas where you can see the money? We have specific areas where you can see the money. And you must have heard the saying that if you do not see liquidity, you will be used as a liquidity, right? That is why it is very important for you to understand where liquidity is. It is important for you to understand where liquidity is. So that is what we are going to be talking about today. We want to understand the places where liquidity is. Now, for every highs and every lows that you see in the market, there is liquidity. In fact, for every candles that you see in the market, it carries liquidity. Meaning that for this high, this swing high, there is liquidity there. This swing low, there is liquidity. This swing high, there is liquidity. This swing low, there is liquidity. So For every areas you see in the market, just like I said, there is liquidity. But how do you know the one that you expect markets to take and the one you are not expecting markets to take? Right? That is your question right now. Also, you need to know that it is market structure that forms liquidity. That was why I was explaining so much of market structure in the last 2 days. It is market structure that moves money, nothing else. For market structure to be created, it means it is creating liquidity in the market. So just like I said, for every highs and every lows that you see in the market, every swing highs and every swing lows that you see in the market, there is liquidity there. So we have types of liquidity. We have a whole lot of liquidity, and then you just need to understand few of them. So number one, I'm going to be explaining what we call old highs and old low liquidity. I'm going to be explaining trend line liquidity. I will be explaining external liquidity. Then I will be explaining internal liquidity. And lastly, I'm going to tell you range structure as a liquidity. Range structure as a liquidity. So first, let's talk about old highs and old low liquidity. Now, when we talk about old highs and old lows, it means those significant places that you can see in the market. Those significant swing points that you can see in the market, those are old highs. Those areas that you see visibly. For instance, this high is an old high. It is very visible in the market. Let me mark that out. This is an old high. And it is a liquidity. It is a liquidity. This is an old high. So if we are talking about old low, we are talking about lows like this. This kind of lows, they are old lows. Liquidity is there. Now, you need to take note of something. It is not enough for you to know that liquidity is there. What is important for you to know is the fact that when market takes this low or this high, what happens? When market takes these lows or these highs, what are the things that happens? When market takes these old highs and old lows in the market, it automatically tells us that market has given us a break. And once that break happens, the next thing you are expecting is a retracement. The next thing you are expecting once an old high or an old low has been taken, the next thing you are expecting is a retracement. So this high has been taken, which is an old high. What you are expecting is an immediate retracement. Why? Because market has taken out a lot of traders out of this market, especially those that are into the market for sell setup. Market has raided them off. So when it takes old highs and old lows, of course we are expecting old high and old lows to be taken, especially when it is in alignment with our structure. We are expecting it to be taken. And once they are taken, market gives us some reversal, which we call retracement. It gives us some reversal, which we tag as retracement. So when market takes old highs, you are not expected to now start looking for a buy continuation. You will be on the wrong side of the market. In most cases, it will take you out. It is going to automatically take you out before it even starts moving in any direction. That is why it is important that if you are buying, let's take for instance, if you are entering your buy from this area, it is important that your take profit, you need to know where to put your take profit. Your take profit should be on the nearest old high or the nearest old low. And when market gives us a confirmation for the sell setup, that is when we are going to join the retracement. If it doesn't give us that confirmation, we are not joining the retracement. So your expectation is for market to come back and target old highs and old lows, take them out before even anything. So old highs and old lows are those significant highs or lows in the market that we are expecting market to come back and take. And after market takes them, then we are expecting a significant retracement. It is just like this area. It is just like this area. Market took out this high. In as much as immediately we did not get our retracement. Let me mark that out. A minute, guys. We did not get our retracement immediately. You can see the market still move impulsively to the upside before giving us retracement. But this is an old high. And after that old high has been taken, you should not have any reason to look for a long-term buy continuation until market gives you a retracement. That is the rule. Now, the second one we are going to talk about is trend line liquidity. This is really beautiful. And I believe intermediate traders are used to it. When we talk about trend line liquidity, it's when a low or different lows are bouncing on a specific line. For instance, something like this. When you see something like this, you can see that continuation to the upside, and market is bouncing on this line. Market is bouncing on this line. That is to tell you that market is not giving us a good movement yet. The reason is because market has not taken any low. It has not taken any high. It has taken different highs, but then it is bouncing on those lows, on those specific area. That is market creating liquidity for itself. Why? Because it knows that many traders, once this high is broken, many traders will want to enter a buy continuation from here. Many traders, a whole lot of traders would want to enter the buy continuation from here. And we've bounced on this low 3 to 4 times or even 5 times. When market knows that a lot of traders would want to buy from that area, what will it do? We'll have something like this. It will give us a reaction. It will give us a reaction like this. Come back, read out all those trend line, and we still move in that direction. Remember, market needs fuel. Market needs liquidity as fuel before making a significant move. Market needs it needs a fuel to continue a particular move. And that is why for every significant moves that you see in the market, it is when market takes a previous high or it takes a previous low. For instance, this. Now, this is an example of trend line liquidity. I'd love to show you this. This is an example of trend line liquidity. Market bounced on that low about 2 times before making that continuation. And you can see that it was after we had those lows taken before market gave us a continuation, a significant move to the upside. Let's see if we can see another trend line liquidity. Let's check the market and see if we can see another trend line liquidity. Please drop a comment. Drop me a comment if you are still following me. So this is an example of trend line liquidity. This is trend line liquidity. In fact, we stretched it up to this point. This is trend line liquidity. It is like a course. Market is going to make effect. Liquidity is like a course. You are expecting markets to come back and raid it. It is like a red flag of the market. No matter how long the movement is, market will still come back and take out those liquidity it has created for itself. And that is the case that happened here. We bounced on this low one, we bounced the second time, we bounced the third time. And for retail traders, some of them is going to enter a buy movement right from this trend line liquidity. It is not bad. But for the fact that some of them do not know where to put their take profit, or they don't know the next liquidity market is coming back to take. Now, this is the first secret I'm going to give you when it comes to liquidity. I discovered this after 4 years. When market takes a particular liquidity, listen attentively, guys. Let's take, for instance, it took out this particular liquidity, which is trend line. For this sell to continue to the downside, it would have to look for the nearest liquidity to take also to continue to the downside. So liquidity reacts to liquidity. Liquidity respects liquidity. This liquidity was taken. Now it is looking for a fuel for this sell movement to happen. And if it does not get fuel until it reaches this high, so be it. It will come back and take this high before making that sell continuation. So when you see that a liquidity has been taken, ask yourself, where is the nearest liquidity that can counter this liquidity that was taken? That is a secret I've given to you guys. Only the wise is going to take note of that and go and backtest it. Let's talk about the next liquidity, which is our external liquidity. Our external liquidity is almost similar with our old highs and old lows. But externals are the ones that you are fully expecting markets to come back to take. Now, for old highs and old lows, it comprises of the highs and the lows in whatever the trend is. But when we talk about liquidity external, we are talking about those high or those lows that you are intentionally expecting the market would come back to take. You are expecting market to come back to take them. So if we are in an uptrend, what liquidity are you expecting market to take? Just like I explained earlier, for every swing highs and every swing lows that you see in the market, there is liquidity. So if we have something like this, a high, a low, a high, a low, then a high. Your external liquidity are those areas that you are expecting market to raid. Meaning in an uptrend, every high that you see in an uptrend is an external. Every high that you see in the market is an external. This is an uptrend. This high is an external. Let's mark that out. This high is an external. This one is an external. This high. It is an external. So those external are suitable areas where you can put your take profit. Our externals are suitable areas where you can put your take profit. So in a downtrend, our externals are the lows. The lows are the external. Every low that you can find in a downtrend is an external. Every low that you can find in a downtrend is an external. And that is why it is suitable for you to look at closest external for you to put your take profits. Now, let me give you this example. Let's go on chart. Let's go on chart. All right. If I am entering a sell setup from here, let's pick this. If I am entering a sell setup from here, my take profit is definitely not going to be on weekly time frame. I don't know what will happen till then. I'm not putting my external around there. I'm putting my external on this low. A lot of you would have seen my trades where markets would take my take profit and it would immediately reverse. That is because I look at closest externals in the market to trade on. This low is my closest external. I'm not looking at putting my take profits here or here. I don't know where markets will get them, but I'm sure that where I am expecting markets to take are these lows, this particular low, this low, this is the low. I'm expecting the market would come back and take this low. That is my closest external. Every other thing, market can do any other thing. It is no longer my business. Now, let me show you another one. If I am entering my sell setup from here, my external is definitely going to be on this low. Whatever market will do after taking the external is no longer my business. But I know that that is my closest external, because when market takes your external, let me give you this tip. When market takes external, the next thing you are expecting is a retracement. The next thing you want market to do is a retracement. That is why it is. And sometimes you won't be able to hold the long retracement market will do. So that is why you just need to put your take profits on those externals where you are confident that when market takes this, even if it is going to continue the sell setup, it is no longer your business, but you know that you are sure that market has to get there. Same thing goes to lower time frame. Same thing. When you enter a trade, some people will enter a trade on 15 minutes and they will put their take profit on 4 hours time frame. It doesn't work that way. Sometimes the retracement market would give you will not be able to hold it. You will not be able to endure it. And eventually what? You step out of the market. After stepping out, it still moves your direction. That is because you are not guided on areas to put your take profit. That is also one of the things that makes you precise as a trader. Knowing where to put your stop loss, knowing where to put your take profits. It is underrated. You need it so much as a trader. Now, the next liquidity I am going to talk about is what we call our internal liquidity. Now, take note of this. I want to draw it on graphical representation before I explain it. See this, guys. When we have a high and we have something like this, take note of all of these, guys. When market breaks this external, this previous high, remember what we said about external. This is our external because this is an uptrend. When market breaks that external, gives us a break of structure. Let's mark that. Once we have this break of structure, market can come and raid all of these lows. It can raid all of these lows and still continue to the upside. The only low, immediately we have a break of structure. Immediately you have a break of structure, guys. Immediately that break of structure happens. The only low that we are not permitted to come back to raid is this low. This one. Every other thing created before this break of structure is what we call internal liquidity. Do not get confused about this. When market breaks external, we are expecting, in fact, if market does not give you a retracement to take internal liquidity, it is not a real retracement yet. If market does not break any internal, that is, if it does something like this, if it does something like this and continue to the upside without breaking any internal, it is not a real internal, it is not a real retracement yet. For a real retracement to happen, we have to have what we call a break of internal. And that is because it has to confuse a lot of traders into the market, making them think this is a break of structure, especially on lower time frame. Making them feel this is a change of character or a break of structure, especially on lower time frame, forgetting that we've broken this high to the upside. So the only low we are not expecting markets to come back to raid is this low. So market is permitted to raid all this internal and still continue to the upside. If this is the only thing you are taking away from this bootcamp, I can assure you that you are good to go. Let me delete this. Let's delete this. Let me show you on charts. We're not going to stay long, guys. I'm currently on a transit. I just had to show up and make this video, make this bootcamp. I don't have any reason to complain, so I just have to come up and do it. I'm currently on a transit and I won't stay so long. So it automatically means that this low has been taken. This is a break of structure. This is a break of structure. Market is permitted in every right to come back and take this high, unless it doesn't want to take it. It is permitted to come back and take that high, take this one. Market is permitted to come back and take this one. It's permitted to come back and take this one. The only high not permitted to be taken after external has been broken is this high. So when market starts taking all this internal, we call it internal liquidity. When market starts taking all this internal, you are not saying, oh, my structure has changed, I want to start looking for a buy. No, your normal structure is still to the downside, which is this low. And all this is still an internal liquidity. That is, market can do something like this. Do something like this and still continue the sell setup. It can break this high and still continue the sell setup. It is normal. And in most cases, when market does not break our internal and it still comes back to the downside and it still comes back to break a previous low, there's every possibility market is coming back to what? To raid those area, because we have to take internal before we have a continuation to the downside. So when external is broken, we are expecting a retracement, and the retracement we are expecting is to take internal liquidity. Okay, I hope we're together. Now the last one I am going to explain is range structure as a liquidity. I have a video on this particular one, but I'm going to explain right now. So when we have a break of structure, let's use the downside as an example now. When we have something like this and a break of structure to the downside, and market does not give us a deep retracement. Instead, market is doing something like this: a high, a low, a high, a low, a high, a low. A lot of traders would classify all of this as the real structure. So when market breaks this high, you think you are in an uptrend. No. From this high to this high, it is a liquidity. We call it range structure as a liquidity. Because here, we've not had a deep retracement back. So market would come back and raid all of this, and it can just continue this way. Especially when there is a void around here. You will just see market come back and raid all the highs created outside that structure, and it will continue to the downside. So most people would be looking for a buy continuation from here. Most people will be looking for a buy continuation from here. Whereas you don't know that what market came to take was liquidity. It is what we call range structure as liquidity. Okay, so let's just show that on chart. Then we go ahead to questions. If you have a question, start dropping it, guys. If you have a question, you can start dropping it. So let's go to another asset and look at that. So let's see on volatility 10. Do we have a range structure here? Yes, we do. A moment, guys. So we had a change of character to the downside. And after this change of character happened, see the lows or see the highs market started creating. Market created this high, this particular one. Market created this high. You can see we started having lower high, lower low, lower high, lower low. Forgetting that we had fair value gap left to be filled here. We have fair value gap left to be filled here. So all this structure that was created outside that change of character, this one, this eye, these eyes, all of this is what we call range structure. Above it, we still have an unfilled or untested fair value gap. Okay, we still have an untested fair value gap. above these highs. So when market took this high, you should not start thinking we want to start buying impulsively for us to take that high, for us to take this one. But you know that we still have an unfilled or untested fair value gap here that we are expecting market to give us a retracement into. And you can see that was what happened. Market came back, gave us retracement, and boom, we had a break to the downside. This is also another example. This is another example. We had a change of character. A change of character. Market created this high. Let me zoom it in so well for you to see. We had this high being created. It is a range structure. A minute, guys. Let me use this. So this high was created. It was created as a range structure. So since this was created as a range structure, when market breaks it, you are not calling it a break of structure or a change of character for a buy continuation. Remember, we still have fair value gap here that is left to be filled. Market has not tested it. So this high that was created is what we call an outside structure. Market has not given us a real retracement back into this place. Okay? So it is very essential for you to know that when we have a break of structure or when we have a change of character, when market gives us that change of character and it creates a structure outside, it means that is a range structure, and most often it is used as liquidity. I hope I have been able to explain something in depth to you guys and you've learned something new about the market. So if you have a question, please drop it in the comments. Let's treat questions and all of that. Thank you so much for your time. Could you please teach us how to calculate lot sizes in synthetic indices? You know what I would do? I'm going to send the lowest lot size into my channel. Immediately I'm done with this session, then I am going to send a link for you to calculate your lot size, for you to know which lot size to use for your small account or whatever. I'm going to send that link to you, then I'm going to send how you can calculate your lot size or the lowest lot size that we have on each of the assets. I'm going to send that. So how many daily candle can be classified as a retracement to a general trend? Good. When we have up to 2, 3 and market did not give us a visible fair value gap or a visible liquidity void on higher time frame, that is when you can classify it as a deep retracement. Let me show you something like this. This is daily time frame. When we had this break of structure, let's mark that. When we had this break of structure to the upside, you can see that we had just 1, 2, 3 candles come back into this area. Now, the reason I'll classify it as a real fair value gap, as a real retracement, is because you can see what it came back to do. It came back to fill our fair value gap. It came back to fill the fair value gap. So meaning there's nothing like fair value gap. There is no visible fair value gap below it again. So this retracement is a valid one. You can see that it came back. It was so visible. Okay, so this is what we have. You can see that it has been filled properly. But look at this. We had 1, 2. We still had a fair value gap, a visible fair value gap above. So when market comes back to retrace into this area, that is when we call it deep retracement. But this one that happened here was not a deep retracement. It was just market coming back or just giving us a range structure, creating liquidity for itself. And just like I said, the liquidity that market creates for itself is what will fuel the market. That is what fuels the market. Look at this area too. We had an impulse to the upside. Market just did 1-2. It just did 1-2 retracement, but it failed fair value gap. It was balanced. There was no fair value gap below. It was balanced. So this is a good retracement for us. Okay? I hope I have answered that question. Okay. What synthetic assets are recommendable for a very small account balance? Use the low volatile asset like volatility 10, volatility 100 1s, volatility 50 to some extent. At least if you are depositing, don't deposit less than $10-15. That is the lowest you should deposit. Don't go and be depositing $2 and you think you can use any of the assets to build it. It won't work. Which $5 you can trade most volatiles? Just use partial. Okay, thank you. But my question will be, how many times will the sweep happen before one can identify internal liquidity? I'm trying to understand the question. Okay, now what I said is, look at this. I want you to take a proper look at this. This is a break of structure to the upside. This is a break of structure to the downside rather. This high here is internal liquidity. It is an internal liquidity. When market takes it, when market takes this high, we cannot classify that we've changed structure. Okay? The only high that can make us know that we've changed structure is this high. That is what can classify to us that we've changed structure. So when market comes to break this high, you are not panicking. You are not saying we have a change to the upside. It serves as an internal liquidity for you. You can see that it occurred before we had a break of structure to the downside. So that is how you recognize your internal liquidity. How can we join your Signal group to grow my $50 account? Please check my Telegram channel. I drop how you can message and join the Signal channel. Then on the Signal channel, we explain to you, or we have a pinned post that explains the lowest lot sizes for you to use, and you determine how to enter your trade based on the stop losses or the pip stop loss that is being dropped. How do you enter trade on the smaller time frame? Don't worry, we will talk about this when we get to entries. We'll talk about entries. How can I join your mentorship class? Now, this is it, guys. I have an upcoming June mentorship session. We had for April, but we did not have for May. So we have a June mentorship general session coming up, which is just going to be for half the price. So just wait for my updates on the Telegram channel about the mentorship session. I am preparing something really huge for you guys. That the mentorship session is not just for you to come and go like the normal classes. It is for you to come and change your trading life. That is what the mentorship session is going to be all about. So we're going to have one for June session. Just wait for my updates on the group about the June session. We had one in April. We did not have any in May because I was so fixed up. But we're going to have in June. Okay? Now, what would you tell somebody to do if he has $200 to trade? Should he buy a prop firm account or trade the money? Now, it depends on your goal. But for me, I prefer to deposit money. Once I deposit the money, I'm going to use it in building the capital I will use for my prop firm, right? I will use it and build the capital for the prop firm. I won't just go and put that money into prop firm, because you will have to pass some prop firm. You have to pass phase 1, you will have to pass phase 2 before you get live accounts. But if you are trading your accounts, you can get, let's say, $50-$100 to buy an account on PropFirm. That way you have 2 accounts. Okay, my major problem is in trading is about confirmation for entry. Now we will still get to entry confirmation, we will still get to entries, but you can watch my videos based on entry confirmation. I have videos about entry confirmations. Just check this YouTube channel and that is it. Okay, how can you identify inducement and internal liquidity? I just made explanation about internal liquidity. We've not spoken about inducement. Do not get yourself confused and do not mix them up. Now, your internal liquidity are those structure before we have a break of structure. So when we have a break of structure, just like this one here, when we have a break of structure, our market comes back to take the high, that is an internal liquidity for you. It is so simple. Okay, what is the best time frame for small amount? The best time frame is not determined by account size. It is determined by the kind of trader that you are. But personally, I love to mix my time frame based on looking at what market is currently doing and the time frame that is showcasing what market is doing. Now, a lot of traders have issues with time frame, and I think I made a video about that. If you are having issues with your entries, most often it is based on your time frame, because you are unable to mix your time frame together. You are unable to shuffle in between them. You are not seeing what you want clearly on a particular time frame, and you are unable to go to another time frame to confirm what you are saying. That is most people problem. So you need to be able to shuffle in between time frame, and time frame is not based on amounts that you have. It is based on the kind of trader that you have. Please, do you have any video on how to identify fair value gap? Yes, I do. Sometimes immediately price enter your PO high, it will just leave without giving entry confirmation. In this situation, what do you do? Now, in this kind of situation, you don't have to force it. If you are not getting entry confirmation, stay out of the market. Stay out of the market, because it is going to be luck if you just enter the market. If you win, it is going to be based on luck. It will not be based on proper precision. You are going out of your trading plan if you enter aggressively. Do you understand? So don't enter aggressively just because market is not giving you a confirmation. Other assets is going to give you a confirmation. Go and check them. Can I profit from your signal group with just $20? No, our minimum capital, or the minimum amount we always advise, is $40 to $50. Okay, so that you can take trades with the lowest amount, the lowest lot sizes. I was told derivative are highly manipulated. What's your take on this? All broker, I repeat, all brokers are highly manipulated. So don't let anybody put anything in your head, put fear in your head. Don't be scared about whatever forex market you want to take. Every broker is manipulated. So it is not just about derivative alone. It is not about derivative alone. And most times people use manipulation as a tactic for not taking responsibility. It is a lie. Most times people use that as a tactic not to take the responsibility. Oh, when market is going in their direction, they feel they are the one that did it. There is no manipulation at that time. But when market is going against them, you start hearing, oh, there is manipulation in the market. This is happening. The river started. It's a lie. It's an escape. It's an escape area for them not to take responsibility. So all brokers are highly manipulated. You just have to know how to shuffle or how to get your way around them. Is it advisable to trade on 1 minute time frame? If you've mastered it, if you can master it, it is advisable. Personally, sometimes I trade on 1 minute, sometimes I look at my 5 minutes. But if you are a beginner, I'm not going to advise that you trade on that low time frame. Okay, so that is going to be all for this evening, guys. Oh my goodness, we're going to end it here, guys. I'm going to see you tomorrow. I just had to show up today. I'm not currently available. So if you have any other question, I'm going to open my Telegram channel group. for you to drop your questions there. And I want you guys to drop it in the comment section if you learned something amazing today. I want you to drop it in the comment section. Motivate me to be able to come tomorrow. I want to be motivated to come tomorrow. If you don't motivate me, I'm not going to come tomorrow. So I want to see your comments in the comment section, guys. So I'm going to see you by tomorrow, 6 p.m. same YouTube channel. Invite your friends and your enemies. You can invite your enemies too. It's fine. That's going to be all, guys. Thank you very much for showing up. Bye, guys.